I mean, there's obviously you can trade a whole bunch of stuff. You can trade commodities. I trade stocks. I think that it's actually better to be a trader than an investor. Like I talk a lot of people like, oh, you're in the stock market. I've invested in Apple and Facebook and Google. And that's fine if you want to like grow your money over the long run. But traders have different time periods. So I made like $2,000 this morning here and I held the stock for like 20 minutes and I actually sold too soon. But if you can compound 2,000 type dollar profits like every few days or every day, I like to say, $2,000 a day keeps a real job away. I don't win every time. I lose actually roughly 30% of the time, but I cut my losses very quickly. So if you win 2,000, win 1,000, win 500 and lose $50, lose $20, it adds up. So how do you actually win? What am I trading? Well, I'm trading basically inefficiencies in the stock market, right? So I trade low price stocks, which the whole world hates because most of them are scams. They're very speculative companies. They might have one or two products. They're probably gonna go out of business in the next few years. But I'm not investing in them when they're going out of business. I don't care what happens to them in 2 or 3 years. I care what happens in the next 2 or 3 hours or 2 or 3 days. Right. That's my time horizon.
So a trader by definition has kind of a short time frame. They're looking at how things move in relation to other things and they're making quick decisions.
Yeah.
Whereas an investor is kind of a buy and hold for a medium or long term and is expecting some type of annualized return.
Yeah.
It's not going to really get anyone excited or buy Ferraris and Lamborghinis.
If you have a small account, long-term investing, I mean, you might get rich by the time you're Warren Buffett's age, and then you can buy like a titanium hip, like with all your millions after a few, literally decades. That's how compounding works. But for me, I'm holding very short-term, and I want my small gains to add up. And I'm trading these low-price stocks. Why would I do this? Like no one asked to like become like a penny stock trader or low price stock trader, but there are inefficiencies. Like I said, most of these companies go out of business in the long run, but because very few people pay attention to them, sometimes there's news and it doesn't get priced into the stock for 1 day, 2 days, 5 days. If you look at Google and they announce some big news, within 5 or 10 seconds, traders around the world know it. It's on CNBC. The algorithm traders are all involved and there's no inefficiency. So for me, I see good news and I'm like, I just hear crickets. No one even notices. And then you can buy the stock. And then when people start to notice it, like there starts to be, journals writing about it, hedge funds buying it like later, 2 days later, 3 days later. And you have time before the world recognizes it if you're meticulous. So I trade these stocks. I teach my students to spot these stocks. And we just look for news. You don't have to try to predict news. I like to wait for the news to happen and then recognize which news has leverage. I'll give you an example. VLTC was a stock that I bought years ago, and the stock was up from 1 to 2 on news that Carl Icahn, famous billionaire investor, was investing in it.
Right.
The stock
he
doubled.
The buyout guy, right?
Yeah.
Like
so he was
raider.
buying this low price stock, and it was like this big news. So the stock doubled.
$1 to $2.
$1 to $2 per share. That's it. But that's a big move. The value of the company doubled overnight because Icahn's involved. But I said, no. When a billionaire invests in a low price stock, like he's basically done the research, like he can invest his money anywhere. So he's giving credibility to this little stock. So I bought the stock. My whole chat room, I have like 1,000 traders and they're always like looking for video lessons and I teach them, not just about picks, but like the process. Right. And they're like, why would you buy a company that just doubled? Don't you think it's up too much? And I'm like, no, this news has legs. A few days later, I sold it at roughly $3 a share. So I made like 50% on my money, right. $2 to $3. Yeah. And then 2 weeks later, it was at 20. So I underestimated that. That's an extreme example. But as more and more people realize Carl Icahn invested in this small company, it could go up more and more. So I'm looking for these inefficiencies.